good morning to everybody listening from a very, very hot Johannesburg. I hope wherever you are in South Africa, you are doing well and you are keeping cool. So let's get straight into the news. The Financial Services Conduct Authority has been quite busy this week and has issued quite a few warnings. The first one is for a company, or not registered as a company, an organization that's calling themselves FX Squad, and Mr. Petrus Rasmus Erasmus, known as Pierre Erasmus, would together referred to as the investigated parties. The FCSA received information that they are offered to trade in Forex on behalf of the members of the public, but they suspect that the investigated parties may be conducting unregistered financial services and or the business of a bank by taking deposits from members of the public. The second warning they issued this week was for a company called Finco World Pty Limited, also known as SPV 1976. The FCSA received information that Finco World offered investments to members of the public and promised unrealistic returns on those investments. The third one is actually a very interesting one because I've seen these communications come across social media places like Facebook and so on. So the FCSA warns the public to exercise caution when dealing with a company called GS or Gold Standard Partners. It has come to the attention of the FCSA that these people are soliciting investments in South Africa. They wish us to inform the public that several foreign jurisdictions have published warnings relating to GS partners. Below are links. If you go to the document from the FCSA, there are links to some of these publications, and that includes a lot of states in the US, Canada, France, and other places. GS Partners is not listed under any financial sector law to provide financial products or financial services in South Africa. The FCSA is concerned about the unrealistic returns offered by GS Partners and is conducting a preliminary investigation into its activities in South Africa. The FCSA has approached GS Partners for comment, and the entity has until Friday, 24 November to reply. Now, the reason why I saw some of these ads on Facebook and other places for GS Partners is because they use some of our sportsmen and women as some of their ambassadors. So that will be interesting to see how that plays out. Then in two other stories, it has been a busy week for South Africans legislative-wise, but also luckily, we do not have to deal with an interest rate hike ahead of the festive season, as the repo rate remains steady at 8.25%. So the broadly expected decision was announced by the SARB Governor Lesetja Kanayo on Thursday, following the bank's latest Monetary Policy Committee meeting. This means that the prime lending rate of commercial banks also remains unchanged at 11.75%. Now, the MPC's decision came despite the latest consumer price inflation reading that scared everybody a little bit for October that hit a 5-month high. It came in higher than expected at just under 6%, and this was on the back of higher fuel prices in the month, load shedding piling pressure, bird flu hit poultry producers and food producers, and that all led to food inflation quickening in October. And then the last news, and I'm sure everybody that is in financial planning has already heard this, but I thought I would reiterate it, is that South African lawmakers decided to allow savers early access to their pension funds from next year, a measure that the nation's biggest insurers expects to lead to a deluge of withdrawals. So as you know, the Standing Committee on Finance agreed to introduce the two-part pension system from the 1st of March 2024 and not from the 1st of March 2025. That was suggested to the Standing Committee by National Treasury. Now, if you read the newspaper comments and all the comments in the media, it shows clearly that the industry is incredibly worried about the feasibility of actually having systems ready and legislation ready and fund rules ready and SARS ready by the 1st of March 2024. But on the other hand, COSATU is extremely happy with this decision. So let's wait it out and see what happens. Then obviously, as everybody knows, today is Black Friday. Now, what is Black Friday? It initially, and as you would think, it was not applied to a post-Thanksgiving's holiday shopping, but to a financial crisis, specifically the crash of the US gold market in 1869. Two ruthless Wall Street financiers worked together to buy up as much as they could of the nation's gold, hoping to drive this price sky high and then sell it for big profits. And on that Friday, in September that time, the conspiracy finally unraveled, sending the stock market into free fall and bankrupting everyone from Wall Street barons to farmers. And the most commonly repeated story behind the Thanksgiving shopping-related Black Friday tradition links it to retailers. And as the story goes, after an entire year of operating at a loss, stores would supposedly earn a profit on the day after Thanksgiving that they would call went into the black, because holiday shoppers blew so much money on discounted merchandise. So however and where it all comes from, it is it very surely found its foothold in South Africa, and we have made a video from the FPI side just to try and help consumers navigate Black Friday. Thank you, Francois, and have a wonderful weekend, everybody. And as I say, stay cool. Thank you.